This is Movers and Shakers, where we interview the upcoming generation of Make It Happen multifamily investors to share their story.
Welcome to the Movers and Shakers podcast. My name is Gino Barbaro, co-founder of Jake and Gino, multifamily investor, educator, father, mentor, and I'm joined by my co-host, my brosif, Josh Rusin, community director of Jake and Gino. Mr. Rusin, how we doing?
Gino, doing well today, my man. Just excited about all the deals popping off in the community and actually highlighting those that are making it happen at a high level. Speaking of which, today we have a very special guest. We're featuring Geoff Stuhr. A little bit about Geoff. So based out of Wisconsin, he's a real estate investor, started his career 5 years ago by buying duplexes and initially had a goal of buying one property per year. And for the first 3 years, that's exactly what he did. Since then, he discovered the power of partnering and the force multipliers in real estate and looked to scale up in multifamily. Geoff's company, Smart Asset Capital, is a vertically integrated real estate investment firm based in Southeastern Wisconsin with a specialization in identifying emerging areas and then raising private capital to buy B and C class workforce housing with solid cash flows in those passive progress, and then implementing new systems and processes to improve the NOI of those assets. As of June 2019, Geoff currently owns 3 duplexes, 2 condos, a 34-unit apartment building, and is a key partner of an 89-unit apartment complex, which he syndicated. Wow. Welcome, Geoff.
Thanks so much for having me, guys. It's I kind of got chills when you read that off. I had to pinch myself a little bit there and think about it. It's crazy what can happen over the course of 3, 6, 12 months.
Yeah, speaking of, let's start with that. Where did the initial idea of buying the duplex a year come from, and why real estate? How did you even get into this arena?
Yeah. Well, I mean, I've always been really ambitious. I think the thought of investing in anything and then investing in real estate came from, I didn't want to be just dependent, I mean, I've always worked for big companies and, I've seen people be at the mercy of what can happen in a big company and a downturn and whatnot. And I always wanted to have a second flow, or I didn't want to be just dependent on one flow of income, right? That everybody talks about, increasing the streams of income. So, I think it starts from there. I owe a lot of my real estate career investing credit to a buddy of mine and a partner of mine, Adam. I'll talk about him a little bit, but a friend of mine, Adam McCarthy, who owns Smart Asset Realty and the management company, was investing in real estate a couple years before me, and he was doing really well. And I was paying attention to that, and I said, hey, I got some money here. I want to invest in a duplex here. And then, as I got that first duplex, and then I got another one right after that, and then was trying to save up money and figure out ways to get another one. And over the course of a few years, I was like, you know what, this really isn't, it's not scaling quick enough, right? I mean, things are going great, but there's got to be ways to scale this up bigger. And that's when I started looking more into bigger commercial multifamily and started reading everything I could about it. And that's where I came across Wheelbarrow Profits, and I guess the rest is history so far, right?
So what's your goal with multifamily ultimately?
Yeah, I mean, I've got big goals. It's not necessarily a unit goal ultimately. I would like to be a partner in multiple thousands of units. My first goal right now is to get to $10,000 a month in not passive income, but in income from my real estate business, after expenses and everything like that. Right. I think, that is, it's a big, hairy, audacious goal, right? It's a big enough goal that I get real excited about, and that I think would offer me the ability to go full time if I want to. And I think eventually that's, no doubt where it's going to go. But I think it's it's certainly within sight. And so, I could say, hey, I want to get to the point where I'm making $1 million a month, right? But to me, I can't conceive that. And, it doesn't necessarily have the meaning behind it. $10,000 a month has true meaning behind it, because it at that point, I'm not dependent on anyone, right? I mean, probably much more before that. But at that point, I could still live a fantastic lifestyle, be able to provide for future family, and and just be running a real estate business, right? But then at that, everybody around me kind of jokes that at that point, because I let everybody know about my goals, right? And everybody around me jokes that I'll probably just set another goal at that point, right? Then it'll be like, okay, how do I get to 30 or 40 or something thousand a month? But
That's
it's
good.
crazy even thinking about talking about that.
Yeah, that's what you want. So how did the Jake and Gino community help you to go from duplexes to, I guess, the 34 unit and now to the KP and the over 80 unit property? What were the golden nuggets or the light bulbs that went off when you joined the academy?
Well, you guys, I mean, I'm the biggest fan, and you guys are just fantastic. I'm a huge advocate. I run a real estate meetup group, and I tell everybody about you guys. So there's actually a couple members in the group. The nuggets that I've gotten, I mean, I would boil it down to 3. I think accountability, right? I'm in an accountability pod. I'm so busy. We're all so busy that it's tough if you don't have a structured system for accountability to kind of follow up on those goals. And not that I get to every single thing that I say I'm going to be accountable for, but even just having that in the back of my mind holds you more accountable to make some more phone calls to potential sellers, or to network more and to push myself to do more of the hard stuff. So accountability is a big one. The systems, you guys talk a lot about systems. So we syndicated this 89 unit deal. I mean, I've read most of the syndication books out there. But even then, right, if you don't have a system that you can lean on, like, there's so much that goes into it. So to be able to schedule a call with you or Bill Ham or Dylan, to kind of reinforce what we're doing is the right thing, or, hey, maybe you should look into this. That was crucial. I don't know if we would have I don't think we would have gotten it over the hump. I don't even think we really would have had the idea that, that we can actually go out and, raise capital and buy this big of a property without the systems that we learned, that I learned from the Wheelbarrow Profits Academy. And then the last one I would say is, and I'm a talker, guys, so I apologize. I can ramble on a little bit, but I get excited and fired up about this. But the last one is just the overall positivity. The group is great. Everybody that posts on Facebook, and I got to do it more, but everybody is very positive, very achievement oriented. Everybody is, pushing each other to rise up and be, as best they can be. And everyone's very helpful. So it's that positive culture. It's the accountability, to follow through on what you say you're going to do. And then it's the systems that are in place that we can kind of plug into.
So what was the challenges with this 89 unit property that you guys ultimately closed on? What were the big, wow, how do I get over this hump?
Man, there was a lot of them. I can, when Chapman's listening to this one, he's going to be laughing too, but there was a lot of them. I actually, so the deal was under contract. I had looked at it sort of before even being involved in the community. And then somebody else put it under contract. That deal didn't work out. It was something with a 1031 exchange, and not exactly sure what happened, but and I was on a ski trip in Lake Tahoe and got a call that it was coming back on the market. I was like the first one, right? I was following up with the broker and following up with them, and just trying to be a good guy to him and network and build a relationship. And he called me and said it's back on the market. And so, we went and looked at it again. We walked through it. We did a really heavy due diligence and put in an offer, and we were negotiating. And I sent the deal out to potential investors that I knew, and one of them went and put it under contract. Literally, like took our underwriting and put it under contract for about $100,000 more than what we were offering. And he had the inside track on all the intel and everything like that. And then so that was one hurdle, right? And a lesson learned. And I think Bill Hamm in the Buy Right Boot Camp told us about that exact same story. And I'm too stupid to actually listen to it, but there's a lesson there. Definitely get a deal under contract before you really share it with other people. But so that was a big hurdle. There was a number of different, eventually that didn't work out. He wanted to partner with us, and we ended up getting the deal back. And, it was, I mean, what a learning experience the whole thing has been. But another hurdle, the property towards the end of the seller owning it, you think about it, right? They've had this property under contract 3 times in the last 6 or 8 months, right? And the management team, and this is a very sophisticated group. They own a couple thousand units up here in the Midwest, and they've done a great job with the property. And that's one of the things that I've liked, and I'll talk through that. But I mean, any business, right? I think if the employees there know that the that the business is going to be sold, things can get a little bit lax. And so, as we looked at the T12, we knew, and not even the T12, but the last, the trailing 36 months, right? The last 3 years, the property was in, trending in great shape. It already had some great systems in there. But, towards the last 6 months of it, especially after being under contract a couple of different times, it started to, vacancy started to go up, and, collections went down a little bit. And the property just wasn't being ran necessarily quite as good. And that made financing a little bit more of a challenge. So there was multiple hurdles with that, and multiple late night calls with Chapman and Dylan, and and then there was hurdles with raising capital, right? I mean,
What's the golden nugget? Yeah, what's the golden nuggets about raising capital? What did you learn about raising capital? Give me 1 or 2 things that, wow, I wish I had done that differently.
I wish we would have done, and on the next ones we'll have a higher minimum, $50K minimum. That was a big one. I think we spent a lot of time with people at the $25K mark, and even below that made some concessions. And that was ultimately a lot of our time, but didn't make a big dent in the raise, right?
Yep.
And so there was that. I think if I'm as I think about it, I don't think we pushed people enough. I think we were a little bit lax until it was time, like, oh, we actually got to get this done, right? And then we started to push people, and we weren't very pushy or pressuring anyone because it was a good deal. And ultimately, it was oversubscribed, and we had, a number of investors to the tune of, $100,000 each that wanted to come in, and they're pushing us to get the next one and whatnot. But, I think had we have had a higher minimum and pushed people along quicker and set like a date, like here's when we're going to be, when we're anticipating this raise is going to be closed. We were kind of just like, hey, look at this deal. We know that you're coming to the meetups, or you're already a real estate investor. We've known you through friends and family. So those are 2 nuggets that I would do: more urgency and like a deadline to have that mark hit, and then also to do a higher minimum amount.
I like that. So what are your next steps in multifamily? Where do you see yourself going? Are you going to go bigger than 89? Are you going to syndicate your next deal? So what are you looking to do next?
Yeah. So Smart Asset Capital is the syndication arm of Adam's got Smart Asset Realty, which is a brokerage. He started that, and then he started Smart Asset Management. and Adam's he's a beast. He's in this area. He started that as a way to help passive investors invest in real estate. And so it'd be like me, a client of his, go out and buy a duplex, and he would manage the duplex for us, right?
Mm-hmm.
So we're trying to grow smart asset capital. They've currently got, they're over 1,100 units of management, including the 28 West, the 89 unit one. We want to grow smart asset capital and do, and are continually looking to find people in our network that want to be involved in it. We've got investors that want to jump into our next deal and are pushing us, hey, when are you going to get the next one? We're open to partnering with other syndicators or capital raisers, as co-GPs. We looked at a 142 unit deal last week. We're actively trying to grow the meetup, trying to grow our network and investor base, and trying to find more deals. We want to go bigger, and try to find the best deals possible.
So before we go to the short answer question, give me a couple of tips on how you cultivate investors and how you've gotten people to come on board and say, hey, I want to go to the next one. Like, let's say a meetup, or what are you doing right now?
Yeah. So I think it's breaking it down into multiple, small steps, right? Like a certain amount of Facebook posts a week, a certain amount of Instagram posts per week, or on your story, finding people that want to come to these meetups, and then staying in touch with them and continuing to blast emails to that group, and just networking in any way we can. And we track the number of people that come to the meetups. It's been tougher in the summer. We haven't had, actually our June meetup is in 2 days, and we're anticipating that it's not going to be quite as big, because it's summer in Wisconsin. You got to compete with the lakes, and you got to compete with people actually finally getting to go outside. So
weather
it can be a little bit challenging, but
weather sucks for 9 months of the year. What do you expect? You know what I mean? It's not like Florida where you walk outside and it's 80 degrees every day. You guys got negative 30 polar vortexes in the winter. Nobody's doing anything then. So that's a funny thing. So maybe you guys go out in the lake and hang out in the lake and get in a boat and do a meetup in a boat. You know what I'm saying? Maybe get a little charter out there and hang out and do a meetup out there. So, got to be creative.
I love it.
Right?
I love it. I think that's what we're going to have to do, because we got to keep those numbers up, keep people interested, and keep letting them know what we're doing, and and then keep looking for deals.
That's awesome. Everybody, let's take a quick break to hear from our sponsors.
Gino, I know a lot of our listeners are wanting to take their multifamily investing business to the next level. I know that you've been hard at work helping Jake and Gino students do just that using our framework. Can you explain to the listeners how they can get our help?
Guys, we've been hard at work growing our community of like-minded investors, and the results of our members has been nothing short of incredible. We're looking to grow this amazing group. What we're looking for is those who want to follow our proprietary framework that we've created: buy right, manage right, and finance right. Leverage our connections, education, and mentorship as ways to take your business to the next level.
So if you're interested in finding out more about how you can become a part of our amazing community, apply to work with us at jakeandgino.com/apply.
Okay, Geoff, so great story so far, man. I love the fact that you took the plunge, been scaling up, and I got some short answer questions here for you. So what is your favorite book that you've read, and why?
Oh man, favorite book. I was thinking, it's tough. As I look, I was thinking about that last night and over, a while. I mean, I have so many favorite real estate books and favorite different business books. I think I'm gonna have to go. I think I got to go Grant Cardone, the 10X Rule. I should have prepared more for this one. I love most of Grant's stuff. I listened to the 10X Rule. I got into sales right after college, and I played football in college, and I tried to approach sales in my sales career as like an athlete training, and I wanted to read. I didn't know anything about sales, so I wanted to read up as much as possible, and I learned. And so I found Grant as from his sales training books, and then you could say that kind of steered me towards real estate too, because he's a big real estate guy. But what I love about his 10X Rule book is, if you have huge dreams and huge aspirations, and you back it up with a ton of work, and effort and extreme focus, I mean, you can accomplish amazing things. And I would never have dreamed that I'd even be doing what I'm doing today, and eyeing down what I think I can accomplish over the next 5 or 10 years. And I think part of that is, thinking about what he talks about in his book.
It's a good synopsis. Taking massive action definitely leads to results. What about your best habit for success?
I'm really big into, I have a morning success routine, right? And, so I would say I'm big into habits. I read a lot about habits. We're reading Atomic Habits in the group, but there's a lot of other books I have up there that are specifically around, building good habits and getting rid of bad ones. I would say my best one is waking up early, and doing, carrying through my little routine, right? Because then I'm prepared for the day. It's like a psychological edge, right? If I've gotten up, at 5 a.m. and I've gotten good sleep, so that means I got to go to bed early, right? So that means I can't be out, 5 years ago out drinking with buddies or whatever, right? Like, it means I got to be in bed, I got to be sleeping, I got to be fresh. Then I get up in the morning, and do my thing and prepare for the day. And I think if you can get on a set schedule where it's like, hey, it's not like I'm waking up at 8 a.m. some days and 7 other days and 5 some days, and I got to catch an airport or a plane, then I got to get up at 4:30. If it's like, hey, I get up at 5 every day, pretty much, you can really then, there's so much chaos in the day, right? If you can make your routine a habit to get up early and prepare for the day, I just think you can get so much ahead of other people that are just, all over the place.
I like it.
That's just me.
Yeah, no, routines are very important. So that's absolutely very a crucial one there. Jeff, I got a question for you. I'm going to throw a little twist in here. A lot of the listeners, if they're considering joining an educational community or even the Jake and Gino community, and they're on the fence, right? Should I do it? Can I do it on my own? What advice would you give to that person that's on the fence, considering it, on the outside looking in, where you're on the inside looking out?
Two things. I think there's strength in numbers. So if you get yourself around, around a group of like-minded people that are trying to do the right thing, you really got to vet each group that you're looking into. And I did, and I couldn't be happier with Wheelbarrow Profits and Jake and Gino and you guys. But you get around the right people, and it can really shorten your learning curve. So like, even if, I'm not naive enough to say that that I could never do any of this stuff without being involved in a group, but I think it just shortens the amount of time that it takes to do this, right? So maybe we would have bought this deal a couple years from now or whatever, right? Just learning and networking and never, paying the money. The other thing is when you pay some money to be, part of a group, right? It's like joining a gym, right? You spent money on the gym membership. Now it's almost like you're holding yourself accountable, right? But the money is so well spent. It's well worth it, right? You do one deal and you blow that out, easily. So I would tell anyone that's on the fence, you get around the right people. There's strength in numbers. You can lean on them for encouragement and support, and you can really shorten the time to value, the time to getting to where you want to get to, right? I mean, we're halfway through, 2019, and since being part of the group, I bought 23 units, eyeing down another 150 units or maybe more, right? So that's pretty impressive. And not being plugged into a system like this, I don't think we would have done that. Maybe we got the 34 unit. We actually had that one under contract before joining the group. This one, the group but we might have blew out of that deal. The confidence that we had from being part of the group helped close that deal.
Jeff, for those that are listening on the podcast and can't see you, how old are you? Just so they know, the listeners.
I'm 29, man. I turned 30 actually July 5th. So I don't know when this will air, but almost a week from now, or a little bit over a week from now. I'm getting up there.
Boom, making it happen, guys. All right, so last question. I mean, you provided massive value here, clearly making it happen and on a trajectory for success. How can the listeners get a hold of you?
Yep. So we've got our website, smartassetcapital.com. My email there is geoff@smartassetcapital.com. You could also look up smartassetrealty.com and learn more about the brokerage and the property management that we're vertically integrated with. And then on Facebook, I've got a real estate investment page called Geoff Stuhr Investment Real Estate. And then I'm relatively active on Instagram. I've got to get a little bit better on that, but I'm pretty good. I post enough. I got to get better though. So and my handle's at GeoffStuhr, and I'm looking to help anyone that I can. I want to network with as many like-minded people as possible. So please feel free to reach out.
Making it happen. Guys, I want to thank Geoff for being an amazing guest on the show and sharing his Movers and Shakers story. If you want to be the next Movers and Shakers guest, email me, josh@jakeandgino.com. Now, if you like the show, please leave us a review. And until next time, let's make it a Movers and Shakers week. Thanks, guys.
Thanks, Geoff.
Thanks, guys. Thanks so much.